What's up, guys? Let's dive right into the charts, show you how we're able to capitalize on this trade. This is a gold setup. I'm gonna break it down real quick. Okay. So right now we have, if we look at the chart, we had the price in a downtrend. So the price was in a downtrend. Right, so we're in a downtrend. Right, so this was the low, but if we look at, again, from yesterday's trade, we have support right here, right? So we have a support, a resistance that turned in support over here, and if we drag it across, you can see it is a valid support area. So price was supported here. So this indicates to us that, okay, now we are heading in an uptrend, right? So we have a low, we have higher lows being formed, right? So when you see that, that's an indication that, okay, price is going to be heading bullish, right? So we have higher lows, higher highs. And so what we're looking for really was, when the price came to this area, all we were looking for was to enter. Now, where did we enter? So the most ideal area to actually enter this trade, after reanalyzing it, would have been this candle right here. This would have been the best area to enter the trade because you broke over this resistance. So, you know, that gives more confirmation that the trade's actually going to go your way. We entered on this trade right here, on this candle right here. As we were pushing up, we entered and we put our stop loss way below, all the way down here, allowing the price to fluctuate. So when you put your stop loss in, it's just to give the trade enough room to actually breathe, right? Because initially, when I enter my trades, I am entering it, you know, assuming that shortly after I'm gonna go into profit, right? It's gonna go straight into profit. Those are the best trades. However, that may not always be the case. Sometimes you'll have pullbacks, but if the area is valid, if your trade is valid, you want to put your stop loss in an area that, you know, if the price came all the way down here, there's a higher probability that the trade is going to be invalid, right? So we fluctuated into a drawdown, a little bit of drawdown, and then the price started pushing up, and then we took 50% profits right here, and then the rest is history, right? So you want to remember that, is that when you're in a trade, the stop loss area is just an area that you allow the trade to breathe. But at the same time, when you enter the trade, whenever I enter, I'm anticipating that it's going straight to my profit. You know, that's not going to always happen every time, but that's how I'm thinking, is that I'm analyzing and entering my trade, understanding that, you know, with the anticipation that if it's an A++ trade, I'm going straight into profit. But if it doesn't, I have the stop loss here as a way, is like, if I'm incorrect about the trade, I only get taken out a little bit of money. I only lose $500 or $250, right? So that's kind of how you got to look at these, look at your stop loss. It's just an invalidation point and allows your trade to breathe. So it covers your downside. So if the trade ever went down to this area, there's a high probability that my trade would be invalid, right? So that's how you kind of look at that there. So yeah, so we had right here support. We had the moving average moving bullish. We had, when we broke out of this resistance, and what's very important is this candle had a lot of volume. So this candle breaking out had a lot of volume. We had a pullback and then a push. So this to me is also an indication that this support is likely going to hold, just because how strong this candle broke above, right? So there wasn't much resistance. Even when it pulled back, the sellers were exhausted with this wick. So the sellers were exhausted with this wick right here. So it shows that the sellers tried to push the price back down underneath the support, but they weren't able to. So this shows that, okay, when the price does come back to this area, it's gonna be a higher probability that it's actually gonna bounce and we're gonna head higher. So we targeted this area up here, which was the resistance zone of the price. So this was just resistance. So we just targeted this right here, and we're able to get a 3-to-1 risk reward. Again, we took 50% off here, as it was midnight. Yeah, pretty much midnight when I took this trade, and then rode it all the way up here, right? So that was today's trade, guys. I mean, pretty straightforward. So now, it is a holiday today in the US, so I haven't placed any trades today. We'll probably place some trades on Thursday. So I'll place some trades on Thursday, and we'll take it from there. So yeah, that's all for today, guys. Enjoy. I hope this breakdown was good. It helps you learn a little bit. Reading the charts is pretty straightforward. It's just your psychology towards money that actually takes the longest for you to understand and kind of develop strategies, and just to make sure that if you're losing money or winning money, mentally, your mental capacity is the most important along this journey, right? So understand that. Enjoy your day. I'll see you guys in the next one. Take care.